the wealth of the business. And that's expressed via the net assets being the same figure as my total equity. And if I flip back now to the example of the balance sheet in my Word document, you can see that there, that they're the same. And that matches the accounting equation on the board. A minus L is the net assets figure, and then OE is the total there. That represents the ongoing wealth of the business. And that's going to change every year because we'll buy more assets or sell them, different accounts receivable values, our cash at bank will fluctuate, our liabilities hopefully we pay off, GST will change depending on how much we've collected and paid, and equity, it could go up or down depending on if the owner takes out more than he earns in profit. So if he earns a good profit, the equity is going to go up, but so are assets because we're going to have cash or accounts receivable. If he takes a lot of money out, then assets go down, and so does owner's equity. And our balance sheet will change. That's the difference there. Lastly, taxable supplies and GST free. Good.
Sorry, what?
Taxable supplies and GST free. We know what that is, don't we? So GST stands for Goods and Services Tax. Very early on in the year, we discussed that the tax is charged where human intervention or effort has happened. And rather than knowing the full list of what does have GST, it's better to learn the examples of a couple of things that don't. So items that are excluded have little to no human intervention.
Is that like milk and stuff?
Yep, and the best example is raw ingredients in food, yep. So food, milk, not bread though, because somebody made that. Milk, apples, pumpkins. I think we get the picture.
What?
Stick to the simple examples.
What made you
is
think
what
of
I'm saying.
pumpkins?
I just bought one last night.
Oh.
I did the groceries and I'm planning on making pumpkin soup this week, so it's in the
Pumpkin,
in my
bring it in
mind.
so we can all eat it.
Mm.
I had pumpkin soup the other day.
Sure.
Scary, so you won't take it home.
So for these ones, they're worth 4 marks. I need to say 4 things of importance. So a standard way of answering this particular question, and there is one just like this, I'm going to define each, which gives me 1 plus 1, get a mark for each definition. And then in order to distinguish, sometimes I give examples to show the difference. So then I'd give an example of each. I might also give an example of entry, or what did we do for the other ones? Current liability. Yeah, pretty much examples is the best
What do
way
you
to
mean
go.
by giving an example of the entry? Like,
Well, see for current and non-current, I'm explaining that current means I'm going to use it, consume it or pay it off within a year. Non-current's more than a year. Therefore, an example of a current liability is GST because I'm going to pay that off or get a payment back from the ATO within a year or maybe even quarter. Happens more regularly. Whereas a mortgage in the business is going to take me at least 5 years or more to pay
So you
off,
just
depending
say
on
that
the term of the
means.
loan. Yep. So that could be my answer. Examples are a great way to go. Rather than continuing to try and explain it, it's easier just to try and assume you get 1 mark. Because they're not very nice with that in the exams. They don't like to give too many marks for definitions because it doesn't show that you can apply it just to give you a definition. What's an understanding? You're right. That's true. That's true. But examples will get you applying, which shows a deeper knowledge. Alright, part C. Answer one of the following. So they've given you 3 options. What is the goods and services tax? We just talked about that one, that's the one I don't think I'll go through the answer. Explain the purpose of it. Consider the following supply chain relating to the manufacture and sale of chocolate which is subject to GST. Using the data, explain how the GST affects the manufacturer, the wholesaler, the retailer and the consumer in the supply chain.
So that's
So everybody pays and charges GST. So that's what you have to work out for each and at different rates. So the manufacturer sells chocolate to the wholesaler for $2.20.
but
So
they've put the GST on that though, haven't
they have.
Okay.
Let's set it up like this.
The manufacturer gives the tax office 20 cents
Manufacturer, wholesaler
back to the wholesaler.
and retailer. So we're going to work out the GST paid and collected of each.
What's the next one?
As it applies, not all of them get both. So the manufacturer sells chocolate to the wholesaler for $2.20. So how much GST is the wholesaler?
20 cents.
Yeah. So he's paid 20. Next dot point. Wholesaler sells the chocolate to the retailer for $3.30.
Okay.
Exactly.
30 cents.
GST paid.
So but they've only made 50% on the sale of that chocolate.
Who?
The wholesaler. So he sold it for $2.20.
Yes.
He's only made 50%. Surely the rule is to make 100%.
Not necessarily.
Because I guess he could be making 200% or something else.
Well, minimum gross profit should be about 20%. If we're not grossing 20%, we'll struggle to pay the rest of our bills for a net profit ratio, but that's a little bit ahead of where we are. Yes?
As far as the tax office is concerned, between the manufacturer and the wholesaler, nothing is made really. Because the manufacturer pays 20 cents per unit, whereas the wholesaler gets a credit of 20 cents.
True.
No, doesn't the
But the
wholesaler...
manufacturer would have probably, depending on what his processes are, have some other GST credits of his own. Not maybe for the raw ingredients, but for the other processes that make the chocolate. We're trying to be sort of simple.
So the wholesalers paid 20 cents to the manufacturer.
Yes. No, the wholesaler yes, yeah.
Yeah.
Yes, I'm confusing myself here. Now, so the customer GST paid of 50 cents. Okay, using the data, explain how the GST affects the manufacturer. So that means that for GST paid, manufacturer has GST collected of 20 cents. The wholesaler has GST collected of 30, and the retailer has GST collected of 50. So there, if you want to call it final GST payable or position to the ATO for the manufacturer is 20. They haven't given us any GST credits on that one, so we just have to run with it. That's the implication for the manufacturer. For the wholesaler, same thing occurs. I mean, if this was a T account and it's my GST clearing, I've paid 20 and I sold it for 30, which means that 10 gets brought down onto the credit side. So therefore, I have a GST payable at the end of that period for 10 cents. So his paid offsets his collected in order to only pay the ATO 10 cents at the end of that period. For the retailer, doing the same thing, if I was going to put it in a T account, that means that I have a GST payable of 20 cents at the end of the period. The poor old customer gets nothing back. He's already paid it. He doesn't lodge a BAS. So back to the original question. Using the data, explain how the GST affects the manufacturer, the wholesaler and the retailer. I am literally going to use this quick little table that I've drawn up and write that information into sentences. For the manufacturer, he charges or collects 20 cents in GST. For the wholesaler, he pays 20 cents in GST in order to get the chocolate and then collects 30 cents in the sale. Therefore, at the end of the period, he owes the ATO 10 cents. See how I'm going to use that just to map out my answer?
So then the retailer only owes, the retailer 20%.
Yeah. So you're actually just going to put that information into sentences. If you don't get around to it, that would give you part marks anyway, to at least have that. But they're asking you to explain. So explain implies sentences. Does that make sense? That question often trips people up, and it's always in the exam. They want you to understand that it's charged differently, and that it offsets the I hope it does. So it's 10 marks. So by the time you elaborate each of those GST paid and collected and come to the final position for each, it works out to be you'd be given about 2.5 marks per column to comment on. How do you feel about that? Poor customer. He is obviously the one that pays the majority of it. I mean,
Well, it
technically,
started off at $2.20. He's having to pay an extra $3 there.
customer is essentially charged all of it. All GST for manufacturer, wholesaler and retailer, which is why he pays, he or she pays 50 cents because it keeps getting passed on each time. They pass it on to the customer every time. The same as if my own cost went up in a business. I'm selling my kebabs and it's costing me an extra $1 now per kebab to make because they're getting better quality lambs or some garbage. I'm gonna charge that $1 onto my customer. I'm not gonna just lose profit. I'll have to charge more. And that's exactly the principle of GST. It gets passed on, which is why people don't like it, and they're not going to be happy if they change it to 15%, which is the proposal. Because
In Singapore, it's only paying 6%.
really, in some ways, it's an effective measure though. If we're going to talk economics, because the rich don't get out of it then. Whereas when it comes to income taxes, where you expect the $1 billion people to be paying heaps of tax,
They don't. They just
They don't.
spend it.
they've got clever accountants and they pay less tax than a labourer.
So if you spend the money,
Not all the time.
technically it's not. I'm so confused with that. Because apparently, if you
Because it reduces your taxable income to claim back the amount that you paid for something relevant to your work. So just say I earn 50 grand a year and then I've decided that I'm going to buy a work vehicle and it's approved as one of my taxable deductions and I can claim that over 3 years. So it cost me 30 grand and I'm allowed to claim 10,000 a year on depreciation and the cost. Then I reduce my taxable income to 40. Because I list my revenue and I list my expenses just like an income statement really on my tax return, and then I only have to pay tax on 40 instead of 50.
that's what all these rich people do. They
That's
just go and
right.
buy stuff. They just go and buy stuff for their business. That's what my uncle did.
They do.
He doesn't pay
Yeah,
tax.
yeah. So that's what that 10
Well, that's what
marks
business
is.
put on its way
And you
into
won't
that.
get the full 10 marks if you don't come out and say that the customer pays for all of that along the way. 20, 10, 20, that 50 cents essentially is paid by the customer. Yes, those businesses are charging and collecting along the way, but the customer foots the bill at the end of the day. And that's why they pay you, because it shows how many hands are involved anyway in getting that chocolate to
That's
you.
a lot of marks for that question.
It is, eh? Even worse in business when they give you 20 marks to do the financial stability and profitability of the
We
business.
don't have to do that in midyears, do we?
I don't think I've given that a 20. I think the most I have is 10. Discuss the financial stability or something. can't remember.
Can we do this in business
Yeah, we are. Yeah.
today?
I wasn't going to record it and do that.
Today.